back, all of you greedy speculators. This is the Forex Market Preview. I'm your host, Jason Stapleton. As every week, I want to welcome back those of you who are returning. About 70,000 of you who continue to hang with us. And behind that, we've got all of you new guys. So if you're brand new and you're showing up for the first time, thanks so much. We're going to get right to it. Talk a little bit about carry forward from what we talked about last week. And then also looking at some stuff specifically to Aussie dollar. And I want to show you some of that as well. Now, we're going to jump right in, take you to look at the euro. For those of you who have had trouble seeing, some of the numbers and things on my chart, what I've done is I've boosted the size of those, so I'm hoping that that will help. So if it's any better, please give me a little note and tell me. Now, this is the same chart that we looked at last week, and I had drawn in at the top, as you guys can see, a series of lines, and I said, these are all potential reversal points. I said the most critical one would be right here, or this would be the initial one that you would look at, and then of course right above that is another one, and then you're really back up into resistance beyond that. So market ended up rallying back up into that initial resistance point. We actually double topped in here. If you guys were watching that, and then we rolled all the way over. So that was your shorting opportunity that we talked about last week. That was your, depending on how you chose to enter that market, if you were looking to get short the euro, we talked about the rationale here behind, why I was short and why I was bearish and why I felt like the market was going to go lower. And while I was still, looking for shorting opportunities, that's a perfect example of there's the move right there. Now, where do you take off those initial targets? Well, again, I'd be looking at right about here. Okay, reason being is that's the most recent structure, and you'll see me do that again and again and again. Using previous structure as my initial target. And the reason that I do that just simply is because the market showed support there before. There was buying interest at that level. So if I'm shorting from here, I really want to be paying attention to that most recent structure because that the market is going to look at. If we get beyond that, then of course there's a chance for some follow-on targets, and that's why I use two different targets when I take a look at trading this. Now, for stops, you've got two different options for this particular trade that you can look at. The first one is right above these spike highs here. Okay, we'd want to be just above there. That's a very aggressive stop because it doesn't give you a lot of room from wherever you're taking your short position, but it does give you a really nice risk-reward profile. A more conservative stop would be back up above these highs. And again, then you just got to make sure that your risk-reward profile works, or you've got to know that these type of trades, these trend continuation trades, will yield you better than 50%. Target 1 to target 2. So basically that's what we're looking at here, and it was a very nice trade. And then the market came back up into and retested previous structure resistance. Now this is what I found was interesting in the market today, this week, was that you had some news about the U.S. dollar. And it wasn't anything that was that terribly detrimental about what was going on over there. Yet for some reason, the market saw a huge rally, almost a 100-pip rally in here, from low to high. And then what happened was the very next day we got some more news out, and then the market went all the way back the other direction. It was very bearish, and so boom, now the market gives up almost all of its gains that it had made the day before, and we settled back along this structure level right here, about 123.21. Now, this market is a very different market than the markets of the past, and if you look at this in terms of a risk-on, risk-off trade, that's the way the market is playing this right now. What I mean by that is, if there is less of a chance of risk, meaning the market seems like it's stabilizing and it seems like everything's kind of getting itself worked out and people are kind of dialing back and becoming a little less concerned about us falling off a cliff, then what you tend to see is negative news in the U.S. pushes money into what would be considered riskier assets, or into emerging markets, or into, in this case, the euro. And so what you had last week was you had the Eurozone, where again they've kind of kicked the can, so to speak. They've put in some measures that signal that maybe something might happen. It's taken the heat off of them for a little while. Now we know long term that's not going to happen, but at least in the short term, it looks like they've got things worked out. So it alleviates the pressure from Europe. So what happens when we get negative news in the dollar? We see it rally. Now that's completely something that we see after the fact. Okay, it's not something you can play a trade off of, but it does give you some insights into why the market's reacting so heavily to what seems like really unimportant news. Now, what's happened is, and I'm going to move these lines for you, is we've run into a nice little channel here. Let me shut this off because I don't like these cursors here. Let me just shut my cursors off. Okay. We've run into this, structure resistance, resistance, and support. So now we've got basically a channel trade. Now you can continue to play this channel trade back and forth, back and forth. Eventually it'll break out. You've had a couple of opportunities. Remember, we sold back here, or I sold back here. Boom. Then we saw the rally. Had an opportunity to short here again. Boom. Then, again, back up into the resistance area. There was another chance to short there if you're playing the channel. And, of course, now at some point we're going to break out. And the question is, are you going to continue to play this channel knowing that, there's a chance it's going to break out sooner rather than later? Another way to play this, I told you, or I mentioned in the email that I was going to show you guys two different ways to trade this. There are two different pattern formations setting up here. The first one is a potential long opportunity. It's a Gartley pattern long, right here to here to here. That was an aggressive 786 aggressive C buy for those of you who are pro trader clients. And decompletion on this is going to complete right around structure resistance. So if I go ahead and bring this all in, you're going to see that 127 extension is going to come in right at that structure level, right at previous structure resistance. If I bring in a Fibonacci retracement, swing high to swing low, you're going to see we're going to be sitting right about on an 886. Let me pull up I don't know why I don't have an 886 in here. Let's make it pink. There we go. Looks like it lines up now. So you're going to see that 886, 127 ratio confluence coming in right on structure. So if we do continue to rally here, it's going to present us with a nice little area to potentially get short. So that short, guys, is somewhere around 124.25, 124.20s is going to be that shorting opportunity for trend continuation again to the downside. Now, there is another option. The other option, whoops, hang on. I must have deleted something. It's all right. The other option here, sorry guys, guess I'm a little out of it today, is a bullish Gartley pattern. We just looked at a bearish Gartley pattern. Now we're going to look at a bullish one. Let me fatten this up a little bit so everybody can see it. X to A to B, B to C, and C to D, Fibonacci extension, swing high to swing low, and back in, coming in at the 127 extension, and that 127 extension is going to settle somewhere around 121.80s. Right underneath that 121.60s, you got major support, okay? A very nice support level back here. So this is going to be a pretty nice area to look for a long opportunity if the market decides to go the other way. And right now, see this, this move in here, this additional test back up into previous structure resistance does not negate this trade. It's still a valid Gartley pattern setting up here. Now, if we violate this to the upside, well, now that's going to invalidate this particular trade. But it's also going to set up a shorting opportunity back up into structure resistance. So there are a couple of different ways here to play the euro. I'm going to be looking at it no matter which way it goes. I would much prefer to see a selling opportunity back at resistance than buying this thing up at the lows. But that's just me because I want to stay with, of course, with the underlying trend. Now, Japanese yen. You're welcome, by the way. Last week, let's bump this out to a daily chart. This was the trade idea for last week. It was a cipher pattern buy that came in. Of course, we looked at the buy right here around 78.24s or so as the market opened that week. And we saw nothing but green candles all the way up. So target 1, 382 was hit. Target 2, 618 was hit. Very, very nice profit there. Now all flat on that trade, meaning we have no open positions. And now we're going to just wait and see what ends up happening. This market could now go anywhere. So now it's sit and wait and hold on that particular trade. Pound yen, we talked about it last week, but we're still trapped in the channel here. Market coming back up into previous structure resistance and rolling back off of that a little bit here on the final Friday trade. So this thing's been in consolidation for a really flippin' long time, and until it breaks out, we do not have a trade. When it does break out, I'll bring you a nice setup on it. Now let's move over finally, and last but not least, to Aussie dollar. Now I said in my email this week that I've been growing more bearish on the Aussie dollar for the past couple of weeks, and actually on Thursday when I was talking with my private clients, I explained to them why I was so bearish on it and why my expectation was that we would see this thing start to correct. And I told them, on a fundamental basis, my rationale for that. And then I explained in the private client group why, even though I had a fundamental bias, I had to wait for a break of structure. I wanted to see technical confirmation of what I was, of fundamentally what I was seeing and what I was expecting. Well, if I drop down to a 4-hour chart, we got that break yesterday, or on Friday, excuse me. Now, here's the thing. Previous structure was right here. Boom. You had the resistance level. You had the support level that we went back into. What happened right here? Break below, close below the previous low. That signals a shift in market sentiment, a shift in market direction, especially when you look at the way this market has been trending. Now, we still are not below trendline resistance. However, there is a trade here. What happened was the market came down, and then in the last few hours of Friday trading, we shot back up to close at 104.36. Now that's above the previous spike lows. And if I go out to the daily chart, this thing is sitting right on that previous support level. So the big question becomes, did the market break structure? Did it not? Technically, according to my trading plan, it did. And that means I can now look for shorting opportunities. The most aggressive shorting opportunity is right here, right at the close, because it closed 104.36. We're back up into previous structure support, which should become resistance. You've got some room here where it could potentially rally all the way back up into 104.65. It could come back up into that previous support level. But certainly, if we do find a reversal here, next stop, look at how far we can go. The next support level is here at 101, basically 102s. So you could fall 200 pips from this place, from this zone here, if we do get a reversal. So there's lots of room here for you guys to make a trade and to make a plan. Again, if you're looking at it and you're saying, you know what, Jason, I'm back on the daily chart. I really want to see that market break and close below on the daily chart before I confirm that reversal, then that's fine. Just have that in your rules. Trade your plan. For me, I'm going to go ahead and look for shorting opportunities on Aussie dollar. And what I'm going to do is I'm going to wait and see where the market opens here. What I don't want is I don't want the market to get above this level. If we get above the previous highs, well, now the market's into kind of a funny trade here, and we could potentially have another cipher pattern sell. Let me just double check and make sure. that that's what I'm looking at. I think it is. Let me make sure my retracement's good. Yep, retracement's good. Okay. So if the market rallies above this level, I do potentially have another cipher pattern sell at the 786. Right here. Okay, and that cipher pattern is going to look like this. Boom, 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 and then back up into the 786. So, trend continuation traders, this is the way we're going to leave this in terms of how I'm going to play this. If you are a trend continuation trader, you're looking for shorts right now between 104.30s and 104.70s. Okay? You've got a 30-40 pip zone here to be watching for that reversal. And if we come up deeper than that, that's fine. You just don't want it to break 105.31. Okay? So you've got kind of a wide area here that you can look for a potential reversal. And you use whatever methodology that you use in order to calculate when that market rolls over. But that's the zone right in here that you can look for that potential reversal. I'm widening it out a little bit just to give you guys room. Now, if you are a advanced pattern trader, the trade here currently is going to be the cipher pattern. If we do rally here, you're going to be looking for the 786 sell. So this is just a matter of what is your trading methodology, what is your trade plan, and then looking for your specific key rules for entry and exit on this. Anyway, so Euro USD, again, looking for Gartley's long or short. You have Japanese yen, which cleared off the board this week for a nice winner. Target 1 and target 2 hit on that. And then Aussie dollar, we're looking for now bearish positions in Aussie dollar. You have a cipher pattern sells potentially setting up, and also trend continuation sells with the break of structure. So lots of stuff happening this week. Before I let you go, all right, this is your last chance to register for the clinic that we're having, the systems trading clinic that starts tomorrow. Okay, I'll put the link underneath this video so that you guys can check that out. It's also in the email that I sent. But do not forget to do that. I mean, we have not put out a system, a day trading system for Forex in about a year and a half. And we put in a lot of work and effort, and Todd has done a phenomenal job of coming up with another great strategy that I think is really going to benefit you guys. So sign up for that. You can get the system to or get the indicators to try out for yourself, and we'll see you guys on Monday in the live room, 8:15 Central Time. That's 9:15 Eastern for that 4-day event. Until next time, guys, good luck and good trading. I'll talk to you soon.